Well, what I've said is I don't believe that we've had enough jobs created and industrial benefits done out of the F-35 contract. I think it's not enough. I think Canadians expect more, and we should get more. I know that Canadians want us to build more in Canada, build with Canadian jobs, and that's what I'm pushing for.
Canada just sent one of its clearest signals yet that the age of quiet obedience in North American defense procurement is over. Standing in front of reporters, Industry Minister Mélanie Joly delivered a line that would have been unthinkable a decade ago, and one that exploded across Canada's political landscape. She said Canada didn't get enough from the F-35 program, and for the first time in years, Ottawa is openly considering a fighter jet that is not American. This is not a routine procurement update. This is a strategic shift and potentially the biggest challenge Canada has launched toward U.S. defense dominance in decades.
When it comes to the Gripen, of course, we're really interested in seeing what can be done. 10,000 jobs is indeed a very interesting offer.
The debate reignited the moment Saab's executives arrived in Ottawa to showcase the Gripen E fighter jet. Their pitch was direct and daring. The Gripen could be assembled in Canada, supported by Canada's existing aerospace expertise, and backed by an offer of up to 10,000 Canadian jobs in manufacturing and research. They didn't just bring a plane, they brought an industrial partnership, a vision of Canada rebuilding its defense manufacturing capacity, and a product specifically designed for the brutal Arctic environments where Canadian pilots actually fly. By contrast, Canada's current F-35 arrangement, negotiated under previous governments, has produced far fewer industrial benefits than what Ottawa expected. The F-35 is unquestionably sophisticated, but it is also dependent on U.S.-controlled supply chains, expensive to maintain, and optimized for theaters of conflict far from the Canadian North. Joly did not try to sugarcoat any of this. She stood at the microphone and said clearly, "Canadians expect more, and we should get more." Her comments landed at a moment when the broader political environment is shifting. The United States, under President Donald Trump, continues to pressure allies with unpredictable tariffs and sudden trade escalations. Canada, under Prime Minister Mark Carney, is redefining its role in the global economy, prioritizing domestic production and pursuing strategic partnerships beyond Washington. Suddenly, a fighter jet deal signed years ago has become a symbol of a deeper question. Should Canada continue to buy American defense platforms when the political relationship is this volatile?
Canada's willingness to question the F-35 program reflects a larger national transformation. For decades, Canada's defense procurement followed an unwritten rule: buying American was safe. It aligned Canada with NORAD, simplified logistics, and reduced political risk. But the world of 2025 is not the world of the early 2000s. Trump's aggressive use of tariffs, pressure tactics, and America First policies has forced Ottawa to confront a reality that was once ignored: dependency comes with vulnerability. Joly's statement is not just frustration over job numbers. It is a public rejection of a mindset that viewed the United States as the automatic answer to every major defense question. Canada wants deals that produce real industrial benefits, not symbolic participation. It wants supply chains that support Canadian workers, not a system where billions of dollars leave the country while only a fraction returns. And most of all, it wants strategic leverage at a time when American policy can shift overnight. Saab's proposal represents something the United States never offered: genuine industrial partnership. The Swedes are proposing a model in which Canada doesn't just buy jets. Canada builds them, repairs them, trains on them, and incorporates them into a domestic aerospace ecosystem. That aligns perfectly with Carney's broader economic strategy, which emphasizes domestic production, supply chain independence, and a dramatic expansion of Canadian manufacturing across key sectors. There is also the geographic reality. Canadian pilots don't operate out of Nevada deserts or Mediterranean climates. They operate in places where -40 is normal, where runways freeze, and where snow can ground an aircraft in minutes.
The Gripen was engineered for exactly that. It can land on highways and icy surfaces, turn around quickly, and operate reliably in extreme cold.
These are not small advantages. They go straight to the heart of Canadian defense needs: the Arctic, sovereignty patrols, NORAD modernization, and rapid response missions in remote regions. Meanwhile, the F-35 is a fifth-generation powerhouse, but it was designed for global strike missions, carrier integration, and joint operations across the Pacific. Its maintenance footprint is heavy. Its cold-weather performance has been questioned repeatedly, and every upgrade, every part, and every software patch flows through U.S. channels. In a time when economic and political tensions are rising, that dependency is increasingly uncomfortable. But the stakes extend far beyond performance or maintenance. At the core of this debate is an uncomfortable economic truth. Canada has spent billions on the F-35 and received disproportionately little in return. American aerospace firms benefit, American workers benefit, American supply chains benefit. Canadian suppliers participate, but at levels far below what was promised at the start of the program. When Joly said, "We didn't get enough," she wasn't speaking casually. She was summarizing 2 decades of frustration inside Canadian aerospace industry. If Ottawa were to walk away from the F-35, the geopolitical consequences would be enormous. Washington would see it as a major breach of alignment. Trump, who has already used tariffs as punishment tools, would almost certainly respond. Lockheed Martin would launch an aggressive lobbying campaign, and U.S. lawmakers would frame Canada's decision as a betrayal of the defense alliance. The symbolic meaning of such a move would echo far beyond North America. It would signal that even long-standing U.S. partners now feel the need to diversify away from American defense systems. In Europe and Asia, this trend is already underway. Countries are building their own fighter jets, forming new defense alliances, and resisting Washington's attempts to preserve dominance over military procurement. Canada, considering the Gripen, places it firmly inside this global wave, a wave defined by multipolarity, industrial sovereignty, and strategic independence.
The real question now is not which jet should Canada buy. The real question is what kind of country does Canada want to be? A country that automatically buys American equipment out of habit, or a country that demands real value, real jobs, real independence, and walks away when those expectations are not met? Joly's message signals a new era in Canadian foreign and defense policy, one that matches Carney's broader shift toward economic diversification and strategic autonomy. Saab's Gripen may or may not become Canada's future fighter, but the political meaning of this moment is unmistakable. Canada is no longer afraid to challenge the assumptions that once defined its relationship with the United States. What happens next could reshape not just Canada's Air Force, but Canada's place in a rapidly changing world. The final decision will determine whether Canada steps confidently into a new era of independence or whether it remains tied to a system that no longer reflects its national interests.
And South Korean President Lee Jae-myung continues his summit diplomacy in Gyeongju. This morning, the president met with Canadian Prime Minister Mark Carney.
Now, this marks their second summit following their first one on the sidelines of the G7 summit in Canada in June. The two leaders reaffirmed their comprehensive strategic partnership in their opening remarks.
In the quiet autumn air of Gyeongju, history and strategy converged. This ancient Korean city, once the heart of an old dynasty, became the stage for a new kind of diplomacy. On October 30th, 2025, Canadian Prime Minister Mark Carney met with South Korean President Lee Jae-myung, a meeting that signaled something larger than a standard APEC handshake. It was the beginning of a new chapter in how Canada sees Asia and perhaps how Asia sees Canada. The two leaders finalized what both sides called the ROK Canada Security and Defense Cooperation Partnership.
It is the first defense agreement Canada has ever signed in the Indo-Pacific. Alongside it came a framework for sharing sensitive data, new plans for cooperation in energy and critical minerals, and an understanding that the next decade will bring the two countries closer than ever before. While Washington raised new tariffs and tightened its focus on domestic gains, Canada and South Korea were drawing a different kind of map, one based on shared opportunity rather than leverage. The symbolism was striking. Gyeongju became the meeting point of two nations that have quietly decided to chart their own course amid the turbulence of global protectionism. So as world leaders prepared for the APEC summit the following day, one question rose above the rest. Was this meeting just a diplomatic courtesy or the beginning of a new balance of power across the Pacific?
For Canada, this moment had been building for months. The last time Carney and Lee met was at the G7 summit in Canada back in June 2025. That meeting laid the groundwork for a partnership that would stretch beyond trade and into the realm of national security and technology. 10 years after the Canada-Korea Free Trade Agreement first came into force, the relationship was evolving from a traditional exchange of goods to a deeper form of cooperation built on strategic trust. Carney's visit to Korea came at a time when Ottawa's foreign policy was being rewritten in real time. Canada had spent much of the year responding to new U.S. tariffs, shifting trade priorities, and a reshoring wave that drained investment from Ontario and Quebec. The government's response was clear: diversify, protect domestic industries, and expand partnerships with Asia's advanced economies. In that sense, South Korea represented the ideal partner. Seoul has become one of the world's most dynamic defense producers, sometimes called the new arsenal of democracy. Its firms like Hanwha Ocean and Hyundai Heavy Industries have built global reputations for reliability and speed. Earlier this year, Korean companies proposed a joint venture worth between 20 and 24 billion US dollars to help Canada build new submarines, alongside an offer to provide artillery systems and support for domestic manufacturing. These were not simple commercial offers. They were signs that both nations recognized each other's strategic value. For South Korea, Canada's technology base and access to critical minerals were key to building long-term resilience. For Canada, Korea's industrial capacity and defense know-how offered a realistic path toward independence from U.S. procurement. What began as a set of defense talks had turned into something more ambitious, an economic and industrial partnership aimed at weathering the global storm together.
The Jeonju meeting did more than strengthen bilateral ties. It revealed how mid-sized powers like Canada and South Korea are beginning to reshape the regional balance. Both countries are navigating between two competing giants, the United States and China, each pulling the region in different directions. In this environment, cooperation between Ottawa and Seoul carries weight far beyond national borders. From a strategic viewpoint, Carney's approach signals that Canada no longer wants to be seen as merely a North American appendage. By partnering with an Asian democracy that combines technological strength and geopolitical influence, Canada positions itself as an independent actor in the Indo-Pacific, one capable of bridging Western institutions with Asia's innovation networks. The benefits for both sides are clear. Canada gains access to proven defense technologies, shipbuilding expertise, and a foothold in Asia's high-growth manufacturing ecosystem. South Korea gains a reliable G7 partner with vast energy and mineral reserves, a gateway into North America, and an ally that shares its democratic and industrial values. Together, the two nations can coordinate investments in clean energy, rare earth processing, and next-generation production methods that neither could achieve alone. But the timing of this partnership carries special meaning. As Washington's tariff policies ripple through global markets, even America's allies are feeling the consequences. From higher input costs to unstable supply chains, both Canada and South Korea have watched export-oriented industries struggle with uncertainty, particularly in steel, autos, and electronics. By tightening their cooperation, Ottawa and Seoul are creating a safety valve, linking two advanced, mid-sized economies that can trade, co-invest, and share technology without the constant risk of tariff retaliation or sudden policy shocks. In other words, this partnership is more than a diplomatic alignment. It is an act of economic self-defense. By pooling strengths, both countries are building an insurance policy against an unpredictable global system. The broader regional message is unmistakable. As many G7 members talk about engaging Asia, Canada has quietly done it. And for South Korea, already at the center of APEC's energy and technology discussions, this new alliance underscores its rise as a hub between Western capital and Asian innovation. At Jeongju, the blueprint for a new Pacific architecture took shape, one designed not by superpowers, but by countries determined to thrive between them.
The Jeonju summit ended without dramatic headlines, but its impact may prove lasting. For Canada, the meeting with Lee Jae-myung was not a mere diplomatic courtesy. It was a declaration of maturity in foreign policy. It marked the first time in decades that Ottawa advanced a major strategic initiative without waiting for Washington's approval. In Seoul, Carney's schedule included a visit to the Hanwha Ocean Shipyard, where he viewed the technologies that could soon help modernize the Royal Canadian Navy. For many observers, that visit symbolized the shift, Canada no longer looking south for solutions, but east. While President Trump spent APEC week reinforcing America first, Carney spent it building Canada global. The difference was more than semantic. One vision narrows alliances to protect domestic industries, the other expands partnerships to protect shared stability. In the coming years, the Canada-Korea partnership could evolve beyond defense into clean energy, nuclear research, and digital infrastructure. Both nations see opportunity in aligning their industrial policies and leveraging their strengths, one rich in resources, the other rich in technology. Together, they could form the kind of resilient supply chain network that many countries have been seeking since the pandemic and the subsequent wave of tariff wars. Looking ahead, APEC 2025 may be remembered as the moment Canada found its footing in Asia. The meeting in Jeonju proved that middle powers can still shape outcomes in a world dominated by giants. It showed that resilience is not built by isolation, but by collaboration among equals. In the end, Canada's pivot to Asia is not a rejection of its past alliances, but an assertion of independence. As the lights dimmed over Jeonju's conference halls, one fact stood clear. In a world of trade tension and shifting alliances, Canada has chosen to stand on its own terms and to walk its own path across the Pacific.
Canada is a world leader when it comes to critical minerals, and America wants in. Washington has just bought stakes in two BC-based critical mineral companies, sending their stocks soaring. The U.S. bought a 10% stake of Trilogy Metals for $35.6 million and a 5% stake in Vancouver-based Lithium Americas.
When Washington announced it had bought stakes in two Canadian mining companies, it sent shockwaves through both economies. The U.S. government, known for its tariff wars and trade confrontations, had quietly stepped into the role of investor. It purchased 10% of Trilogy Metals for $35.6 million and 5% of Lithium Americas, both based in British Columbia. For the White House, it looked like a masterstroke, a move to secure control over resources critical to America's future. But for Canada, it marked a subtle yet historic shift. The world's largest economy had just bought into its northern neighbor's ground, and in doing so, handed Ottawa an unexpected advantage. After years of trade friction, steel, aluminum, lumber, and auto tariffs, the balance had shifted. The country once on the receiving end of American pressure suddenly held something the U.S. couldn't easily replace: control over key materials at the heart of modern industry. This investment was not a random gesture. It reflected a new philosophy within Trump's second term, a shift from confrontation to ownership. Instead of taxing competitors, Washington began buying into industries it deemed vital for national security. Critical minerals became the centerpiece of that approach. Officials said the goal was clear: reduce dependence on China, which still dominates global lithium-ion battery production. The U.S. Geological Survey noted that America's lithium supply has long relied on imports from Chile and Argentina. For the administration, investing in Canadian firms offered a faster way to rebuild independence and secure cleaner supply chains across North America. But this new play blurred the lines between free enterprise and state control. By taking equity positions, the U.S. government no longer acted as a neutral regulator. It had become a participant in the market. Previous cases of government equity, such as the investment in a Nevada-based rare earth company, had already doubled in value, strengthening the idea that public money could yield private-style returns. Yet beneath the optimism lay a paradox. The plan meant that America First now depended on Canadian minerals, Canadian laws, and Canadian oversight. The United States had entered its neighbor's industrial landscape not as a dominant power, but as a shareholder bound by another country's rules. In Ottawa, the reaction was calm but confident. Canada had long treated its resource sector as a matter of sovereignty. In recent years, it blocked several foreign takeovers, especially from China, arguing that national security must come before profit. But the American investment was different. It gave Canada both financial inflow and political leverage. Even with Washington holding small stakes, the projects remained fully governed by Canadian law. The deposits, the permits, and the refining facilities are all under Ottawa's authority. That means any operational or environmental decision must pass through Canadian channels first. Beyond ownership, Canada controls something more valuable: refining capacity. Its plants in British Columbia process zinc and germanium, essential ingredients for semiconductors, batteries, and defense systems. After China restricted exports of germanium in 2023, those refineries became irreplaceable. American companies now depend on Canadian plants to turn raw ore into usable materials, a dependence no executive order can override. The U.S. may own shares, but Canada owns the bottleneck. That quiet reality transforms the power equation. What once made Canada vulnerable to tariffs has now become its shield. The very industries Trump sought to pressure have turned into tools of leverage. The consequences of this new model extend far beyond two companies. The moment Washington entered the Canadian mining sector, investors took notice. Mining stocks surged and resource funds began flowing north. Canada's position in the global mineral supply chain strengthened overnight. Inside the U.S., the political reaction was divided. Fiscal conservatives warned that government ownership in private companies resembled managed capitalism. Economists questioned whether this approach distorted competition and blurred accountability. Others pointed out that such investments contradicted the free market principles that once defined Trump's political brand. Meanwhile, America's allies saw opportunity. As trade tensions grew, partners across Europe and the Pacific turned to Canada as a stable alternative for supply and investment. The country's combination of political stability, advanced mining standards, and growing government support made it an ideal hub for Western reindustrialization. Ironically, Trump's attempt to consolidate control over supply chains ended up strengthening Canada's global standing. The policy designed to secure American dominance had elevated its neighbor instead. Just a few years ago, a tariff announcement from Washington could send shockwaves through the Canadian economy. Today, that dynamic has changed. By taking ownership stakes in Canada's mining firms, the U.S. has tied part of its own industrial and defense future to a foreign partner. And not just any partner, but the very one it tried to pressure through tariffs and threats. For Canada, it is more than a symbolic win. It's proof that control of supply chains equals political independence. Every shipment of refined lithium and germanium crossing the border is a reminder that economic power now flows both ways. Trump's strategy was meant to restore American dominance, but it has exposed the limits of unilateral control in a globalized world. To build electric vehicles, batteries, and advanced weapons, the United States now needs Canada's minerals, Canada's infrastructure, and Canada's cooperation. That reality reverses years of imbalance. The U.S. can still wield tariffs, but it can no longer dictate the rules. By investing north of the border, Washington didn't just buy stock, it bought vulnerability.
In the battle over resources, the advantage now lies with Ottawa. What began as a show of strength has become a quiet backfire, revealing that even the most powerful economy can find itself dependent on the ground it does not own. And in that silence between the minds of British Columbia and the corridors of Washington, one truth stands out. Power has quietly shifted north. This time, the upper hand belongs to Canada.
And earlier this week, Prime Minister Mark Carney announced a new economic and security agreement with Mexico. And just yesterday, Canada's finance minister held talks in Denmark with European Union officials. Now, all of this comes as Canada looks to diversify its trade portfolio in the face of Trump's tariffs.
When Washington raised tariffs this year, Canada faced a stark choice: stay quiet and accept the pressure, or reach out to new partners. Ottawa chose the second path. Within days, Prime Minister Mark Carney signed a new economic and security agreement with Mexico, and Finance Minister François-Philippe Champagne traveled to Europe for high-level talks with the European Union. These steps were not symbolic gestures. They were clear signals that Canada will not stand alone, no matter how much pressure comes from the White House. What was supposed to be a moment of weakness has turned into a moment of action. Trump's tariff strategy was designed to corner Canada, to make the country feel dependent on access to the U.S. market. Instead, it has become the trigger for Canada to strengthen bonds with its continental neighbor and one of the world's largest economic blocs. The choice Ottawa made is now reshaping Canada's trade strategy and shifting the balance of power across North America and beyond.
Trump's reciprocal tariff regime was unveiled this summer as a sweeping attempt to reset global trade. According to the White House proclamations, tariffs on cars and parts rose to 25% in March 2025 under Section 232, and a wider reciprocal framework took effect on September 1. The intention was clear. By raising duties, the administration hoped partners like Canada would concede quickly. Yet the opposite is unfolding. Ottawa is responding not with retreat, but with acceleration. Instead of waiting for relief from Washington, Canada is building a trade firewall of its own. Tariffs that were designed to weaken Canadian industries are forcing Ottawa to search for stability elsewhere. Each new duty on steel or aluminum, each added barrier on canola or copper is acting as a trigger for diversification. Rather than standing isolated, Canada is turning outward, binding itself more closely with neighbors and allies who are eager for dependable partners. This is how a tariff policy meant to dominate has ended up opening doors for Canada abroad. The first door opened in Mexico City. In mid-September, Carney and President Claudia Sheinbaum announced a strategic partnership covering agriculture, infrastructure, energy, and security. For Canadian canola farmers cut off from China's $5 billion market, Mexico's growing biofuel sector now offers a badly needed outlet. For Canada's energy producers, Mexico's infrastructure expansion creates fresh demand. The agreement is short on fanfare but long on significance. It showed that Canada can still shape continental ties without bending to Washington. Only days later, Champagne landed in Europe to pursue the next step. Speaking with EU officials in Denmark, the message was about more than trade volumes. Canada already has CETA, which in its 8 years has lifted services trade by over 70% and goods trade by 65%. The new focus is what experts call CETA Plus. That means moving into strategic cooperation on energy security, critical minerals, defense, artificial intelligence, and digital trade. These are the very sectors where Canada wants to secure future growth. With Europe searching for reliable suppliers of nickel, cobalt, and clean energy inputs, Ottawa is presenting itself as a trusted partner. By expanding ties with both Mexico and the EU, Canada is weaving a network that makes tariffs from Washington less decisive.
The chain of events is striking. Trump applied tariffs to isolate Canada. Instead, Canada responded by strengthening bonds with Mexico in Europe. The U.S. sought leverage. What it created was momentum for Ottawa to diversify. Rather than waiting for concessions, Canada is building its own strategy. The numbers tell the story. Trade with the EU has already expanded by double digits under CETA. The new partnership with Mexico targets agriculture and energy worth billions. And consultations at home are preparing Canada for the formal review of the North American Trading Pact next year. The lesson is that tariffs do not always weaken their target. In this case, they have produced resilience. Canada is not retreating, but repositioning. Trump's policy was meant to break Canada's unity, yet it has instead accelerated Canada's outreach and strengthened its global standing. What was supposed to be a trap has become a turning point. Canada is showing that it can withstand pressure, forge new ties, and emerge more secure than before.